Welcome back to Switzer. One man who specialises in trying to find up-and-coming stocks is Michael Kodari of KOSEC Securities. Let's see how he views the stock market right now and whether he's identified some companies worth investing in. Michael, thanks for joining us.
Yeah.
Now, mate, I've seen a lot of your ads on this station. Explain to people what your company actually does.
Well, Peter, the stock market's the highest returning asset class, and a lot of investors want to diversify into the market, but the biggest problem is finding the right opportunities. So, knowing where to start, which stocks to buy and when to sell is the biggest problem in the stock market. Even professionals struggle to buy the right stocks.
So in a sense, it's like a stock market guidance service.
Not only we educate, we guide. We're a private wealth management firm, so we've got clients, some of them are very high net worth. They don't have the time to invest in the stock market. They give that opportunity to us, and our aim is to make them money with less risk.
Okay, so given that, and the market has rebounded about 14%, how are you investing now? Cautiously or ears pinned back and heading to the finishing line?
Well, these are exciting times. I mean, you've got RBA having interest rates at 1.75, and we are in May, and the market's rallied 14%. So the volatility we love, because without volatility, you can't make money in the market. Well, not as much money. So what you want is the highest return with the less risk. How do you minimize risk? Do as much as research as you can so you're confident about buying stocks.
Okay, so but given the fact that a lot of the stocks that look fantastic on February 10 have now been bidded up, and you might have heard ST Wong, he's still seeing value in the market.
Yes.
What kind of stocks are you looking for now?
Look, we look for stocks that we can make money from. So we look at the economy, we look at sectors that are growing, and out of those sectors, the right businesses to invest in. So what are the right businesses? A business that's making money, a business that has cash flows that are growing, return on equity is reasonably high, debt is reasonably low, and they've got a good management team and a great product to sell. Because without the product, you don't really have the good business.
What about, do you have much confidence around materials at the moment?
No. So if you're investing in mining services, materials, it's like swimming against the wave. Doesn't matter how good they are, you're going to get affected.
So you think the BHP's jumped from, say, $14.20 to over 20, that was a very lucky phase for BHP, that it's more likely to be subdued below $20?
Yes. See, BHP is a great company, but the problem is the sector they're in is under a lot of pressure from China and globally. So it doesn't matter how good they are, and this is BHP. The smaller ones have no chance. So if you got someone like BHP going down to $14, I mean, at $14, is it undervalued? A lot of people can say yes, but what if in the next 10 years, there's not much growth within that sector at all? So, you've got to sort of oversee that. If you're in the stock market, you want to make money. You want to look at the sectors that are growing. Okay,
so what sector do you, in particular, what sector looks like the best at this point?
Okay, excellent. So you spoke about our commercials. They've been running for the past year and a half, and it keeps playing TPG, Ramsay, Domino's. And all those stocks within the past year and a half at all-time highs. So it just shows you...
So you're still sticking to those
Absolutely. Those stocks are very nice. So, we had the confidence to put those stocks on our commercials because we could see the track history of these businesses. Ramsay's in healthcare, so we've got an aging population, so it makes sense to look at a business as good as Ramsay. TPG's in telecommunications. Telcos are growing rapidly. So the telco sector is great. TPG's a great business that keeps acquiring other businesses and growing. And then we've also got Domino's Pizza, so food and technology, right? So, they're very innovative, and they've got a great management team behind them. So even if you pick these stocks for the next 5-10 years, they're great businesses to make money from.
And I guess the argument would be, if there is another silly dip like we saw in January, they're the sort of companies that go chasing.
If you see a dip, it's a great opportunity to buy good businesses. 2 months ago, I was on your show. You asked me about a stock. You said, what would you buy this year? I said, I'll buy TPG this year and for the next 10 years. And I mentioned the stock was reporting that month. It reported the stock went up 12% in 1 week. So if you pick good businesses, doesn't matter what the market does, you're always going to make money.
Okay. What about a company like Blackmores? Have you run your eye over that?
Yes, Blackmores was also in our commercials. The day we brought that out, Blackmores went up 30%. Great business. You know, it's selling a product that people need, and it's in the right sector.
You don't worry about the threat that China might change the rules of the game?
China might change the rules of the game, but long term, these businesses have earnings that are growing. They've got return on equity that's growing. They've got a good business model. So if you think about businesses to buy, look at the sectors, look at the company itself, its financials, its management, and then it's all about buying at the right time and selling at the right time.
Do you ever play ETFs?
No, we don't play ETFs. Why? Because, you know, we don't invest in the index. We tend to have our own strategy, which is look at globally what's happening in US, China, Europe. How does that affect our own economy? From our own economy, you know, what's happening out there? Is consumer confidence growing? Is business confidence growing? Is unemployment dropping? Based on those factors, which businesses can take advantage of? So if you conduct that strategy, you'll be very consistent in making money.
Your big picture view on the Aussie economy and the global economy?
Look, the Australian economy's done really well. The problem is we're very conservative. We're not as aggressive as the American economy. Unemployment is not very high. We've got our growth. You know, it's not the best, but it's not very bad. So we're not in trouble in any way. And we've got good businesses. There's just a shift from mining to a different area. And if you're very clever, if you find out where that shift is and where that money is going to flow to, and you pick good businesses in that sector, you'll make money.
Is there a financial company you like at the moment?
Financial, well, it's with financials. So the way I see it is, you know, what's the need in the financial sector? At the moment, the fastest growing product is annuities. And you've got a company like Challenger going out there and really marketing that sector. And, you know, that would be the business that
I guess as interest rates go down, those annuities look far more attractive than when term deposits are 5 or 6%.
That's right. Or the stock market looks more attractive too.
Exactly right. Michael, thanks for joining us.
Thank you very much.
Michael Kodari of KOSEC Securities. That's the show for tonight. Thanks for joining us. That's the show for the week. Don't forget, Best of Switzer over the weekend. And I look forward to catching up with you on Monday. Have a great weekend.